Financial assets have cycles. Sometimes they go up for years on end. Other times they remain subdued for seemingly endless periods. It's constantly evolving. Investors are trying to predict when the next cycle will begin and make gains for years or potentially decades. You came here for the truth, so let me unveil that for you. Today, we are going to discuss financial assets, we're going to discuss the ECB, negative yields, and so much more. Let's begin. Equities versus commodities. This is a great chart here. It shows you the comparison between the two. And notice on the far right corner here that we are in fact at the bottom. It fell below the levels of the dot-com bubble and just prior to the oil crisis of the 70s. And it seems as though a pattern tends to form, making its way below the median. It at some point comes back, reverts, and goes ballistic. This time around, could it occur? At some point they will have to, but I don't know when. That's more of what I will talk about in a second. Look, the global financial crisis 2008, Gulf crisis, oil crisis. One of the things that they all have in common is oil. Oil prices can increase dramatically in a very short period of time. But as you know, they can also come down just as fast. Whenever there is a crisis with oil, it quickly escalates around the world. There are all sorts of political events that occur, threats are being made, they talk about businesses being affected by it, and all the way down the line, things become more expensive because the price goes up, the gasoline goes up, everything is affected by that. Then you have the potential for agriculture to be more expensive and everything else all along the line because oil, shipping, you know the drill. Now, what is it about oil that's so interesting? Well, first, you can see the WTI has risen to 56 approximately. And the Brent has gone much higher, in fact. It's quite a big spread. You'll see this here after coming down from approximately $110 within about a year and a half or so. The price came down to 1/3 of that, even less. And you'll see that it can happen in such a short period of time that it makes a huge difference in terms of areas of the world that are exporting oil. So if you look at areas of Canada that deal with oil, all of a sudden real estate prices, jobs, everything's affected by it. And you look at other countries like Venezuela or other countries that are pumping out this oil, they don't make the same revenue they did before. They're hurting big time, especially when oil is their only export or their major export by far. They're going to be hurting. So look at oil, then we look into agricultural commodities. They've been hurting for a long time now. It has been years and years on end. They did spike, however, for years. Since the financial crisis, it's basically like a continuous decline. You can track all these, by the way, if you're not aware of that. You can find even something simple like an ETF, and one of the tickers that you can use if you want to search is DBA. Different agricultural commodities ETFs, just to see the price. I'm not necessarily suggesting anybody put their money into that, but just to see where things have gone. And you will notice that prices have certainly come down on a whole, of course. So is this the bottom? Is this the time to invest? Well, my own personal opinion on this is that money is finding its way into equities. And while they're, in my opinion, again, overvalued, that's where money's going. That's where central banks are putting their money right now. They're not putting their money into corn and wheat. So the chances of those going up more so than Apple and Amazon, it's really unlikely for now, as it stands right now. However, in a very long-term scenario, obviously, agriculture is so important. I'll leave it at that. I don't want to put too much emphasis on that. All right. And now for what I talk about consistently. Number one, entering back into the financial crisis. This is the financial crisis part 2. I am the broken record GPS. This is where we are at today. And lo and behold, real average hourly earnings is down. I don't know how they said it was up anyway. These are month over month ratings, but it hasn't been in this territory since the financial crisis. So take this for what it is. I continuously suggest the fact that real earnings do not keep up with the amount that we spend. The amount that we spend consistently goes up. And that was determined, by the way, thank each and every one of you who replied to me on the previous video when I asked, what is your inflation rate? And everybody was telling me stories about how in different cities, different countries, all around the world, literally all around the world, people were saying, measuring a few years ago, measuring today, things are more expensive. That was the end story. And it's so good to know that there are all these people collecting all this information, bringing it to me, and I can do videos about it, and we can become like this crowdsourced, videos and understanding and knowledge. It's amazing. It's truly amazing. This is not one financial guru standing up here. No. This is crowdsourced information. This is the genius. And I owe that all to you. Anyway, so we have what we pay for, food, energy, everything else going up, and our wages are essentially coming down. That's not a good thing. The central bankers, they love this, how this continues to spread over time. Not me, and I'm sure you don't agree with that either. Real average hourly earnings, this is year over year, and it's come down somewhat. Look, take it from where is this? Beginning of 2015, or take it from financial crisis. Doesn't matter. As far as I'm concerned, this has been on a downtrend. Okay, very quickly, there's a lot to cover here. I'll just touch on a couple points. Massive distortions in the financial asset prices worldwide. These are some facts. US yields have been among the lowest ever on record, dating back to 1776. Does that not bother anybody? Okay. US equity valuations have risen to levels rarely observed, and from this perch have always been followed by massive losses. Okay. Over $9 trillion in sovereign bonds in many European countries and Japan are negative current yields. Italian 3-year government bonds are in the negative, despite its third highest debt to GDP ratio. Argentina, which defaulted 6 times in the past 100 years, issued $2.75 billion worth of 100-year bonds, paying 8% interest. It's some people, it's maybe this is just me, but some people love to watch sitcoms. When I read this information, I laugh. I literally laugh my you-know-what off. The BOJ owns over 75% of all Japanese ETFs. The Swiss National Bank owns 19 million shares of Apple. Okay? That's it. It's gone insane. Truly. Look at what's happened in the global QE. The Fed, the ECB, the BOE, the BOJ, the PBOC, and the SNB. Guess what? They're all printing. All of them. All right? Now, the Federal Reserve, they have stagnated and kept it all in the back. If they are printing, nobody will know. But they haven't got rid of their balance sheet yet. So it's 4.5. But what's interesting, and anybody who's willing to comment on this, they always like to attempt to throw a, let's just say, make a mess of what I say. The BOJ and the ECB have picked up the slack for the Fed printing less, or not printing additional. If somebody stops printing or reduces their balance sheet, somebody has to come and fill in the void. That's just the way it is. That's the new economy. All right. And then last but not least, 9.7 trillion, basically $10 trillion worth of negative yielding debt despite monetary normalization. Does that make, is that not wild? This is going to go down in the history books. $10 trillion of negative yield. You're supposed to run away. If you see negative yield, you're just supposed to look the exact opposite direction and just run. But that's not the way it works. They're selling like hotcakes. This is genius. This is brilliant for them. We can actually take money away from people and make a hell of a lot of gains over these period of times. In this period of time, they have been able, in these few short years, since this whole negative yield started, the profits have been incredible. And yet, the banks are in dire straits. Something is truly fishy. Because they're profiting like crazy. The CEOs are getting bonuses. They're claiming everything is just fine, and yet there's literal bank failures taking place. Well, I for one am not having it. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. If you're interested, links are in the description below. Take care.